Good evening, friends. Welcome back to my channel Intraday Trade. My name is Robin, and let's do an Nifty and Bank Nifty analysis for tomorrow. So before we begin the analysis, let's just discuss in the market today. So we expected that the market can show some recovery, or maybe it can make a halt candle or something like that, and the market definitely did it. Yesterday, SGX Nifty was indicating a very big gap down. If that would have happened, the recovery would have been easier to trade, uh, or if we would have opened with a gap up, then we could have expected some fall. The market opened literally flat. Okay, so whenever the market is opening flat, yesterday I had clearly mentioned that once we cross the previous day uh, low, we could go for put with smaller quantities, keeping in mind that the market can reverse anytime. And we mentioned that we could see 38,600, and I think the low made was 38,613. And immediately around 38,600, it showed a sharp reversal. And why this reversal we planned? Because FIs had put shorts, so definitely we knew that the market can take a U-turn. And Bank Nifty did not give much time to actually understand. But like I always tell you, if you are planning any reversal trade, you should always rely on the Fibonacci retracement levels, because 1.618 acts as a strong reversal point. So easier to trade. People who are full-time traders and are dedicatedly trading would have found it easier to trade even the downside, and uh, also the reversal could have been easier to trade. Sorry. So what next is the question, and looking at the charts, what I feel here is we'll definitely check all the data and stuff, but I'm just showing you all what the chart says. Okay, so previously, uh, what happened is we saw a fall. Okay, and post this fall, we saw some bearish flag kind of pattern. Okay, 1 second. I don't know why it's not working properly. Yeah. So we saw a bearish flag kind of pattern. Next day we opened gap up. This also acts as a trend line. We took support at trend line, but then broke it and we saw a huge fall. And now if you see, the pattern looks a bit more similar, because we saw a fall. Now this is like a bearish flag pattern. We have a trend line here, and SGX Nifty is indicating positivity. So probably if we open tomorrow with a gap up, say around 39,500 or 600, we may come down again. So based on the historical pattern, I am just assuming it. But now we'll check all the data and see, do we have the capacity to go up or not. Let's see that. So let's first discuss the data quickly. And today I'll also show you my option chain, how it helps in trading. Okay, see, FIs have created future longs just about 1400, but this is a surprising number once again. 21,166 future shorts being added again. Now this is like uh, enough, right? So every day, like after a small recovery, they add more shorts, and that's what is happening. If you look at the options, the net numbers at the moment is net long, like there are about 60,000 call longs and 85,000 put longs. Again, they have also shorted stock futures. So these are bad numbers. Okay, this indicates that the market has to go down further. And if you look at pros, the net number of call long is too much. So tomorrow maybe they might have, or they might face some issues. Okay, and they also have some put long numbers. So overall FII's position again looks pretty negative. The only good thing that could be seen today is the cash selling wasn't that significant. They just sold about 200 odd crores. So if we look at their daily data, right now they have nearly 1,63,000 future shorts, which is naked. And this number, uh, you know, if people follow this data, this number came in during Jan, Feb 2020, before the corona fall, we saw these kind of numbers, and this number is again back into the system. Not really sure what is the reason for it, or are we expecting such a big fall? But whatever it is, definitely looks dangerous at the moment. Okay. But anyways, like we said, FS positions again seems to be negative after this pullback. So maybe we should be planning uh, a further downfall, maybe tomorrow or in the next week. Okay. Now I'll show you the option chain that I use. This is this is the option chain that I use. So yesterday's PCR was around 0.5. We discussed this in the video, and we also discussed that this is oversold region, and we could see some improvement in the PCR, and that's what we could see. Today we went around 0.9 and then closed at 0.78. Okay, so what is interesting in this, in my option chain, is basically this is the change in open interest charts. So basically what I do is I record the data, okay, for every 5 minutes, which is quite helpful in understanding the trend. I'll show you my recorded data. See, this is my recorded data. So from 9:15, how is the call open interest changing or the put open interest changing? I definitely record it. Okay, and I also get to know what is bullish and what is bearish. So anyway, that's it. So what I meant to say is, if you look at the uh, open interest change in open interest chart, okay, so the green color means it is put and red color means call. Okay, so what do we see here is 38,800, 38 so 38,800. First here the put shorts began heavily when the market started falling. Okay, so market fell, and we could see some good amount of put writing coming in, and then eventually at 10:15 we got an indication that the market can reverse because the call short suddenly started decreasing and the put short increased. Okay, and if you see in the uh, price action here or in the chart 10:15, so this candle, okay, so this candle indicated uh, us even in the option chain that the market is going to go up. Okay, so that's the kind of indication that you get if you look at the option chain closely. That's why I always keep on saying that, today depend on the option chain data. It might help you. And if you look at, see, the 38,900 and 39,000 call in the morning, obviously they had open interest high on the call side because the market started falling. So there was some writing here. But then see, eventually after that, so slow and steady, okay, after 10:15 and 38,800, and then from 10:20, 25 and 38,900, put writers started getting aggressive, and that's how it was, and that's how slowly see the things changes. So each and every strike, like once one strike is crossed, we come to the next strike and see if put writers are getting aggressive or not. So this is the kind of indication that you get if you follow the option chain properly. And another thing is, you can also look at the volume charts. Okay, so here the green color indicates put and the red color indicates call. We could have this color vice versa, but to avoid confusion, because in the change in open interest I always keep red for call and green for put. So here volume indicates buying of that particular option. If you look at 38,800, people were buying put options. Again 38,900, people were buying put options. But what was surprising here is, from morning, even if the market was falling, 39,000 call and 39,100 call. So here put buying was not there. Okay, see, imagine it was an expiry day, and uh, people usually prefer buying put options in the money. Okay, but there was no interest in the put here. But what was interesting here is people were buying call options aggressively from the morning. Okay, so around 12:15 there was a dip, So let's see why there was a dip at 12:15. So yeah, 12:15 was here, somewhere here. So since it came, below the close price of the previous day, I think some call buyers got scared here, and then but eventually again the market started going up. So that's what we can see in the call options. So in this way, with the volume analysis and the change in open interest analysis, you can always come to a conclusion before taking any positions. So I hope you all like this option chain. You can also make one like this, and this is really helpful because we constantly keep on watching what's happening here. So now I'll show you if I change the see today market closed somewhat in a bullish mode. Now let's see the next expiry data how it is. So in this one, if you see, put writing was also good today. But let's see how it is in the next expiry. See, this is next expiry. Put writing is very minimal, but the call writing is strong. Okay. And if we come here, uh, avoid this PCR because this PCR is based on the current expiry. Here we could see 39,000 call still has a good amount of open interest here. Uh, and 89% writing was seen today in the call option and 84% in the put option. So this still looks a bit scary, though market went up today, but here we could still see that call writing seems to be a little aggressive at 39,000 because I think most of the people would carry a straddle here. But then let's see how the data builds up tomorrow. That will help us to understand where the market is heading to. Okay, so now coming back to the charts, I'm extremely sorry. Uh, yeah, coming back to the chart. So what are we supposed to do here? The first thing is the entire world can see that there is a trend line formation here, right? So everyone will say that okay, once the trend line breaks, go for a put. Good idea, but what I would suggest here is in case if we open say flat or slightly gap down, I would only buy a put once we close below 38,934. Okay, that is based on this close, the previous day close. Okay, so today we came down here, but the market reversed and managed to close above that. And tomorrow again, if we come below this level, the defending of this position will become less and the market can go down. Okay, so in that case, if we open flat, we'll only buy put once we close below this level and immediate target happens to be 38,600. And as per Fibonacci, the bigger target happens to be around 38 to 20. So we may see that level too in the coming days. And since Nifty is indicating positivity, the SGX Nifty, and imagine we open gap up. So until 39,774 or 39,800, I will only prefer put. Okay, if we open somewhere here, I'll definitely prefer a put. Just wait for one candle, and if we close below that candle, we could go for a put, and our first target should be around 39,200. Okay, so a good 600 points fall we can expect, and the market is usually volatile, so definitely, it will see you will see sharp swings, but then eventually it has to come down because 39,800 happens to be the trend reversal area. Above that the market can reverse based on the Dow theory levels. So that's why this level is important, 39,774 or 39,800. So any gap up until this place, I would definitely go for a put. And if say market is opening gap up around 39,500, wait for some time, use the Fibonacci retracement tool. Okay, so whenever Bank Nifty opens gap up around 200 points or plus, and Nifty opens around 80 plus points, use the Fibonacci tool. Okay, so for example, I'm still bearish because FIs are bearish. So tomorrow, if we open gap up, I'll wait for the market to move to 1.618. Okay, and there when I see some reversal, I take PE trade and then I'll sit on that and wait for this target. That's how you should trade when there is a slightly big gap up or gap down. So we spoke about flat opening and we'll buy only put here, and when to buy call. Call I'm still not interested here, but just in case if we get a dip until 38,934 and if we see a reversal, you could try a call here, because the stop loss will be very small. You just have to keep maybe a 30-point stop loss, and then you can sit for a ride around 39,500 we could book. Okay, so any dip until 38,934, look for a call trade with not more than 50-point SL in Bank Nifty spot. So that translates to around 25 points in options. So this is my view on Bank Nifty. Let's quickly check out Nifty. So Nifty also gave a decent close today, uh, but we know that 17,040, I discussed in my yesterday's video, this is going to be a resistance. So I've added another line 17,063, and above this, we can be bullish. So how do we get bullish is basically, we should open flat and then eventually give a breakout, something like this. We will go for a call, and we could look for a target of around 17,140 to 17,200. Okay, this is one of the trade that we could plan. uh, but if we open, say, gap up, uh, so where is the, yeah, so in this case 17,200 is the trend reversal area. That's why I have the line in blue color. So we could, so anytime if we reach 17,200 tomorrow, definitely we could go for a put again, no problem. But the chances of reaching 17,200 tomorrow looks very, uh, I don't think we can go, because see, everywhere we have a swing high and people will try to sell, or people would try to short the market here, and so definitely it is going to have trouble. But in case, if you're planning this trade, you could go for a put short. That would help you a lot more. Okay, so when do you buy a PE if market opens flat only below 16,947, or let's say 16,940? Okay, we'll keep some buffer. 16,940, below 16,940 we can expect an immediate fall until 16,850 or 840. Okay, yesterday also I mentioned that Nifty can take support at 16,840, and today it exactly formed a W at 50. Okay, so put only below 69.40, and call, I told you, if we open flat and if we break out, then we can go for a call. A gap up, say if we open, so this is 78 point. Okay, so let's say 100-point gap up, then we'll open just somewhere around 17,100. So here we will see what's happening. Same, I think better to use the Fibonacci extension tool. Wait for it to reach 1.618, and from there, wherever it reaches at 1.618, we'll try a put if market opens gap up and continues to go on. Okay, only in that case, both for Nifty and Bank Nifty. So that's the plan, and rely on the option chain, because we'll have to closely watch how they are planning the coming week tomorrow. Okay, so thank you for watching. Let's meet in another video. Till then, take care. Bye bye.